Good day. I'm David Mandy, President of OlM Partners. I want to welcome everyone to Seabridge Gold's Town Hall Call, which is hosted by Rudy Frank, Chairman, Chief Executive Officer of Seabridge. Thanks to our 6-minute CEO platform, we have a very well-rounded panel of money management analysts, as well as you in the audience, obviously well-informed because you're here. In the spirit of the 6-minute CEO, Rudy will present for 20 minutes, and then we'll turn to the Q&A. As I said, Rudy's Chairman, Chief Executive Officer. It's a real pleasure to introduce Rudy. He's the co-founder of the company as well. He spent 35 years in the gold business and started Seabridge in 1999. That's 20 years, very long commitment. Rudy has been playing the long game, as we all know, many who have already heard this story, that he successfully created a leveraged play to rising gold prices. And he's always adding value. Unlike many other companies in the mining industry I've worked with, Seabridge is not static. Every report shows Seabridge with more assets and resources, more gold, and now more copper. Seabridge currently has several times the assets and resources it had several years ago in multiple massive project areas. So this is a company that keeps on getting better. And many believe patience will be substantially rewarded. On that note, I'd like to turn it over to you, Rudy.
I assume you can share the screen with me now.
Do you see the prompt, Rudy?
I do not.
Okay, there we go.
Okay, there we go. Okay. Just give me a minute to bring it up.
We can see you now.
Okay, well, thanks for the introduction. As David promised, I'll try to keep the presentation relatively short. I promised him under 20 minutes, so here we go. Just a reminder that I will be making forward-looking statements. So, we've talked about gold for a long time. We formed the company with the belief back in 1999 that the price of gold would go substantially higher. Back then, gold was trading at about $260 an ounce. At $1,800 today, obviously it has gone substantially higher, but we still think that the best is yet to come. Our case for gold is based on the amount of debt that's been created in the global financial system. We had a global credit crisis in 2007 when global credit stood at about $170 trillion. You might be surprised to know that it's almost doubled since then. And the only reason that the system hasn't blown up yet is because we are now living with forced interest rates that are at 6,000-year lows. We believe that going forward, inflation is here to stay. It's not transitory. We believe that the government will continue to monetize the debt to try and keep yields down. And as a result, we believe that the best is yet to come in gold. In fact, we're on record stating that we believe that the price of gold next year will reach $2,500 and may go higher. So why Seabridge? Well, we have a 22-year track record of showing significant outperformance in a rising gold price. If gold is going higher, so will our share price. In addition to gold, we'll also spend a little bit of time today talking about our copper. At KSM, it is the world's largest undeveloped gold and copper project as measured by reserves or resources. It's also shows tremendous capital efficiency. And then last but not least is, our success has been based on our ability to find gold. Our exploration team has found more gold over the past 22 years than any company on the planet, and that includes the majors. And since 2015, when valuations got low again, we went out and secured 3 new projects, any one of which we believe can be company makers. And we're about to launch exploration programs on all 3 of those over the next few weeks. One thing we've also tried to avoid as a company is political risk. I've had mines that I have built in my career expropriated. Political risk is real, tends not to happen in the United States and Canada. And as you can see on our map here, all of our projects are located either in Western Canada or the Western United States. When we formed the company, it always amazed us looking at how quick dilution happens in our industry. And it's not just the junior companies. If you look at some of the senior companies, the amount of shares that they issue relative to what they're providing in terms of growth is not very good. One of our guiding principles from day one is to grow ounces in the ground faster than shares outstanding. And as you can see on this front, we have delivered. In fact, by the end of 2020, with about 75 million shares outstanding and 159 million ounces of gold in the ground, each one of our shares was backed by over 2 ounces of gold resources per common share. And as you can see on the slide here, compared to the industry, nobody comes close to Seabridge in the concept of ounces of reserves per common share or ounces of gold resources per common share. In fact, we provide 5 to 50 times more gold ownership per share than just about any other company on the planet. And what that has translated into over the long game, as David mentioned, is significant outperformance in our share price relative to gold or other gold equities. As you can see on this chart, we've outperformed the gold price by a significant margin, and even more so to some of the other better known companies in our space. The fact is, if the gold price is going higher, which we think it will, our shares should continue to outperform gold and other gold equities due to the embedded leverage we have in terms of ounces of gold per common share. But we're also not just about gold. Along the way at KSM, we also found a lot of copper. In fact, if you look at our copper reserves and resources per share, compared to the larger copper companies or some of the gold companies that actually produce copper as a byproduct credit, you can see that we also provide better leverage to the copper price than most of the better known copper names. And why is this important? We believe we're now in the beginning stages of another super cycle in copper that will be driven by the global transition to a green economy, and also by the fact that it's getting more and more challenging to build new copper mines. In fact, if you look at the projections going forward, we're now already in deficit, where we're actually consuming more copper than we're producing as an industry. And that will only ramp up as a result of new copper uses in electric-powered vehicles, wind turbines, and other green energy initiatives. In fact, in addition to these numbers here, Goldman Sachs actually now estimates that by the year 2030, we will be sitting at a deficit of about 8 million metric tons of copper per year. And between now and then, the cumulative deficit will approach over 30 million tons. So if you believe in gold like we do, we also have the extra benefit of significant leverage to the copper price as well, which we believe is about to go higher. Turning now to our projects, our most significant asset, as you all know, is our KSM project, located in northern British Columbia. It's in the heart of what's known as now the Golden Triangle. We are the largest there in terms of metal content. But what we're starting to see here is the senior gold companies and the senior copper companies showing up now into our district. You have Red Chris with Newcrest owning 70%. Newmont has a 50% stake in Galore Creek. They just acquired a 100% interest in GT Gold and the Tatoga project. And then you also have Teck here in a big way in terms of copper projects. We've now spent about $400 million at KSM defining not only what is the world's largest gold copper project by reserves or resources, but also a project that has successfully gone through the environmental assessment process with permits in hand to start construction, and also a project that has been supported by the local indigenous groups around us. In fact, we have impact benefit agreements in place with the Niska Nation and the Tahltan Nation. Another big advantage we have is the amount of infrastructure that's been put in place with other people's dollars. When we bought this project from Placer Dome in June of 2000, there really wasn't any infrastructure there. Fast forward to today, we now have a major highway, Highway 37, just to the east of KSM. Along that highway, the government of Canada and British Columbia has spent over $700 million extending the power grid with cheap hydro source power. We've now secured through contractual agreements with BC Hydro 250 megawatts of power, which will electrify the mine at KSM. And then just to the south of us, we also have the town of Stewart that has 2 new port facilities available to us. Big projects rely on cheap power, ports, and highways. We don't have to build any of those ourselves, they're already there. At KSM, we're blessed with an abundance of metal. In fact, between our 5 deposits, we have 9.8 billion tons of economic resources that are either confined by open pit shapes or block cave shapes. And those 9.8 billion tons host 140 million ounces of gold and over 50 billion pounds of copper. We've been working on mine plans over the past few years to try and fill what we now have permitted as tailings capacity. Even though we have 9.8 billion tons of resources, our approved tailings facilities at this point in time total about 2.4 billion tons. In December of last year, we acquired the Snowfield deposit. That's now new to the project. But if you look at some of the historic mine plans we've done before Snowfield, one that stands out is a 2016 Prefeasibility Study. When completed, we were using base metal prices of $12.30 gold and $2.75 copper. And at those prices, the project at that time, with a 50+ year mine life, showed an all-in cost of production of about $670 per ounce of gold produced. And that includes the cost of construction, over $5 billion, the sustaining capital over the 50-year mine plan, the closure and reclamation costs, and the operating cost net of copper credits. And obviously, as you can see here, at higher metal prices, this project provides tremendous leverage to higher metal prices. But it only gets better. Last year, we did an updated study incorporating some of the higher grade copper zones we found. We put together a mine plan called our 2020 PEA that captured 40 million ounces of gold, very similar to what we had in the 2016 pre-feas. But instead of 10 billion pounds of copper, that mine plan captured over 19 billion pounds of copper. And if you look at the projected economics from that study, the all-in cost of production dropped from $670 an ounce down to $4 an ounce as a result of the additional 9 billion pounds of copper that went into that mine plan, again, still limiting the mine plan to the 2.4 billion tons that we have permitted. We're now in the process of doing another iteration of the mine plan. This will be an updated pre-feasibility study that will take Snowfield into the mine plan. Snowfield is a deposit that we've been looking at for a number of years and finally got to a deal last year with Pretium where we came in and bought this project for $100 million in cash. With 35 million ounces on the front end, it means that we actually bought these ounces in the ground for about $3 an ounce. If you want to look at it in terms of the share count, we issued about 6 million shares to raise the dollars to pay for this in a bought deal financing. We got 35 million ounces in return. So we got over 5 ounces per share for this acquisition. We're now in the process of updating the pre-feasibility study, collecting the data that's necessary to conduct new mine plans. We're doing metallurgical drilling there for testing to blend ore with Mitchell from Snowfield. We're doing geotechnical drilling and obviously new mine plans and new capital forecasts. We expect the capital to remain about the same in that the footprint of what was designed previously remains. That does not change. The only thing that will change will be the mine sequencing. We also expect a significant improvement to the project's internal rates of returns, net present values, and payback periods. This updated study should be completed towards the end of the first quarter of 2022. As I mentioned earlier, we made our name with our ability to recognize exploration opportunities, taking advantage of down markets and buying these projects, and then as the markets got stronger, raising the capital to advance them with exploration success. In 2015, when the price of gold hit about 1,050 and valuations got low again, we took that as a sign that it was a good time to go back in and start to look at ways of regenerating our portfolio. We bought 3 projects since that time, the first of which was the Iskut property, which is a property that's located about 30 kilometers from KSM. What excites us about Iskut is we think it could be another KSM. We have the same age of mineralization, we have the same rocks, we have the same structural elements. In fact, with this project came a small resource that had over 2 million ounces of gold and over 500 million pounds of copper. We're now in the process of starting another drill program here, focusing on what we believe is a gold copper porphyry system that lies beneath the lithocap that we identified in previous drilling. Last year we did encounter gold and copper. We still think we're at the outside of the heart of the system, and this year we hope to vector into where the higher grade zones might be. The geophysical signature of this zone here is quite large. Second acquisition we did was the Snowstorm project in Nevada, a project that sits on the intersection of 3 of the most prolific gold belts in Nevada. Our focus at Snowstorm is to find something akin to Twin Creeks or Turquoise Ridge. Previous drilling over the last few years has confirmed that we have the same structure, that runs right into Snowstorm from Turquoise Ridge. We have the same rocks. And last year we found that there actually was gold in our system as well. We are now starting another drill program. We had a news release that went out on this morning to hopefully vector into the higher grade zones that are evident at Turquoise Ridge and Twin Creeks. The best place to find a new deposit is in close proximity to an existing mine. You can see the infrastructure here. If you stand on top of our Snowstorm deposit and look down the valley, you see two of the biggest mines in Nevada that are now part of the Newmont Barrick joint venture in Nevada. The most recent acquisition we did was a 3 Aces project in the Yukon, a project that we've been following for a number of years. But last year with COVID upon us, it finally came to us in terms of a reasonable valuation. We purchased this project for about 300,000 shares and granted the previous owners about a 0.5% royalty. This is a large project. It's over 300 square kilometers. It really is a district play. There's been a lot of high-grade showings at this project over the past few years. In fact, some of these showings right near surface are quite extraordinary. You know, multiple meter widths right at surface of a 1/2 ounce upwards to 2 to 3 ounces of gold per ton. We've now pulled all the data together. We did some geophysics earlier this year, and we expect to start our drill program at 3 Aces sometime in the next few months once we get the permits in hand to start our drilling program. To wrap it up before Q&A, why Seabridge? If you believe the price of gold is going higher or you believe the price of copper is going higher, no company out there provides more leverage to these metals than we do. KSM it stands out by itself in terms of a world that needs new projects, especially big gold and copper projects. This is the largest thing out there. And if you look at the industry today, we need new copper mines. We're not producing enough copper as an industry, and the gold industry essentially is running out of gold. Their reserve life now is about 10 years, the shortest I've ever seen in the 35 years I've been in the business. Exploration success. We've built our name through identifying opportunities and then delivered on them. We now have 3 new projects in the portfolio, any one of which we believe could be a company maker. Snowfield. I mean, Snowfield really is a game changer to us in terms of what it will do for KSM. It's going to simplify the mine plan. It's going to allow us to go open pit only if you want for the next 30 years without needing to develop some of the higher cost block cave minings. However, if you want to go after the higher grade copper, that's there. So the optionality that Snowfield brings to the KSM project is remarkable. We've talked a number of years about wanting to get a joint venture partner in place for KSM. We recognize that it's too big on our own to develop. Our goal is to bring in a joint venture partner, one of the major copper companies or the major gold companies, or perhaps even a syndicate that can commit the capital to advance this project to a construction decision and make it one of the largest mines in the world. I think what we're proud about most, though, is our ability to keep the share count low. After 22 years of running this company, we only have about 77 million shares outstanding, which is quite low considering the asset base we've built in and around that dilution. Finally, one final comment before Q&A. This is a company that's also very tightly controlled. Insiders of this company, co-founders, and others that have been shareholders of ours for 20 plus years own nearly 40% of the stock. That's remarkable, I think, when you think about how long they've stayed on as shareholders. But they also support us in financings. When we did our bought deal financing to acquire Snowfield in December of last year, 80% of the stock of the $100 million that was raised was taken down by existing shareholders. So that's my prepared remarks for today. I think I kept it to under 20 minutes. So David, happy now to go to Q&A.
Thank you, Rudy. Well presented. We're going to start at the top. Art Yevon. Art, questions today for Rudy? Thanks for being on the call.
Rudy?
Here's Art.
Rudy? Can you
Yeah,
hear
we
me?
can hear you, Art.
I can hear you.
Okay, great. I'd just like to say that, I've been a shareholder for many years. I've met you at many conferences, at luncheons in New York, Florida. I don't know what you're waiting for. I mean, you're not getting any younger. You're in your mid-60s. And, what gives? I understand that you want to get as much as possible, obviously. But I mean, when are you going to call the cards? I mean, you know what I'm saying.
Well, Art, you ask this question every time, and I appreciate it. It's when we get the right deal with the right partner. I mean, you have to recognize the fact that KSM is an asset that maybe there are 7 companies in the world that have the technical, financial, and social wherewithal to develop the mine. And up until recently, most of those big companies were still fixing the mistakes they made at the prior top when they took on a lot of debt, grew their debt positions large, and then the market went against them and they were forced to sell non-core assets as a way to pay down debt. They're now all cashed up again. They're producing a lot of cash flow from their operations. Their debt levels are back to manageable positions. You know, my experience in the business, which I've been in for more than 3 decades, is there's a time to buy and a time to sell. We're now approaching a time to sell. So, sit tight, hang on. I think we'll all be rewarded as shareholders when the deal happens. But again, we're not going to give it away just for the sake of checking a box and saying the deal is done. In a joint venture at KSM, we're looking to maintain or retain a 30 to 40% interest in the project while minimizing our capital contribution. And we're hoping also that our capital contribution comes in towards the end of construction, which will make it a lot easier for us to raise at that point in time. As an example, we can keep 30% of this project, but only come up with 10% of the capital. That means that we'd be putting in about $500 million towards the back end of construction. But this is a project that, as designed today, and will only get better with Snowfield, that at today's metal prices will be producing over $2 billion of cash flow a year. 30% of $2 billion of cash flow pays back our capital contribution in less than a year, and then starts to deliver a lot of value back to our shareholders in that we have a mine life here in excess of 50 years.
You know, one of the things that you mentioned briefly was the jurisdiction of Western Canada, British Columbia. But today, with problems in Ecuador, Chile, Peru, it should make the company that much more valuable.
I agree 100%. And again, that was by design in the beginning. As I mentioned at the very beginning, I've had mines expropriated that I have built. Even jurisdictions that were thought to be safe, like Chile, are now getting more challenging, not only because of the increased dividends and taxes, but also local opposition to projects getting built. We recognize that when we have KSM here, that we're going into someone else's, jurisdiction, someone else's neighborhood, and you need to treat those people fairly and openly and honestly. I think if you look at our track record in terms of dealing with the indigenous populations here, we've done a good job on that. A lot of other companies around the world, talk a good game, but when we actually look at what they do on the ground, very, very disappointing.
Thanks for your question, Art. I'm glad we got that out of the way. We'll turn next to Brad Fowler. Brad, question for Rudy today. Just got to unmute Brad.
And just a reminder, each person has to unmute themselves by using the microphone icon.
Okay, let's go down to Donald Long. Oh, no, Brad's not undone. Let's go to Donald.
There we go, Donald. Thank you.
Thank you. Thank you, OlM Partners and Mr. Rudy Frank this afternoon for your wonderful presentation. Can you hear me?
I can hear you fine.
Thank you very much. So I just have 3 questions. Number 1, can you please break down the main capital expenditure items for your main project? Number 2, how many employees are you expecting to hire for the developmental mine work? And number 3, given the size of your projects, are there any developmental agreements with the Port of Prince Rupert? Thank you very much.
We will not be using the Port of Prince Rupert. We'll be using the ports that are located at Stewart, which is a much easier haul from Stewart to our project. So those will be the port facilities we'll use. And as I mentioned earlier, there's already 2 of them there. Our capital is split into a lot of different components: site capture in terms of roads and tunnels that have to be built, the mill itself, mining equipment, and then water structures. I'm not going to break it down for you in detail here, but if you go to the KSM project website that we have, you can get all those details on how the capital is broken down. We're looking at about $5 to $5.3 billion of capital to build this mine, and a lot of that going into tunnel work and also into the milling facility. And in terms of number of employees, it's in the thousands. During construction, I think we're estimating over 5,000 employees during the 4 or 5 years of construction period. And then once in operation, I think it's somewhere between 1,000 to 2,000, depending on the mine sequencing that you do versus open pit versus underground. It'll be one of the major employers in British Columbia. It'll be generating a lot of not only taxes from the project direct to the government, but also employee taxes that will be paid by each of the individuals. And also it's going to be creating a lot of jobs. And that's really important. You know, you look at the impact benefit agreements we have in place with the Indigenous peoples, a lot of those center around job opportunities that will be created for them in terms of, you know, highly skilled labor. We've already started a lot of education with the local communities in terms of trying to educate them in terms of types of jobs will be available. We run a bursary system here where we've actually funded a lot of, you know, college kids going to get disciplines that could be used at projects like KSM. But it'll be one of the larger employers in British Columbia, and definitely the largest mine in Canada.
Thanks for your questions, Donald. We're going to turn now to Herb Stiles.
Hello, it's Peter Bell. Sorry, keep you waiting.
Yeah, we can hear you, Herb.
Oh, okay,
So-
thank you. Good.
It's Peter Bell. I just asked a question for you, Rudy. I know you're waiting for your fat pitch. I know you've seen cycles before. Any thoughts on waiting too long? You know, how do you know it when you're in it? You don't want to sell too early. You don't want to sell too late.
Well,
Does
great question.
do the other deals that you have coming in kind of help you take off some of the pressure about trying to get the KSM sale exactly right, or something about all?
Yeah, so you know, we've gotten close a few times. In fact, we had a deal pretty much fully documented a few years back, and then the copper price went against us, and this company's share price hit the skids. So that deal didn't happen. You know, the deal's going to happen when the timing is right. What I can tell you, the amount of interest we're now seeing in the project through due diligence by the larger companies we've never seen before. You know, the best time to do a deal is when you have a lot of competitive tension. And I think with what we're seeing now in the market in terms of high copper prices, high gold prices, what we're seeing in terms of the cash flow that's being generated by these bigger companies, and also their dwindling reserves, I think that the light is shining on us now, and we're getting close to the time to get a deal done. And I will tell you that nobody in this world wants to get a deal done more than I do. Believe me on that. I've been doing this for 22 years. We built a remarkable asset base here, but I fully recognize that an ounce of gold in your pocket is worth more than an ounce of gold in your ground. And that's our goal in the joint venture, to get these ounces out of the ground and to find a way to distribute them to our shareholders through some unique mechanism.
Well said, Rudy. Okay, thanks for your question. Peter, we're going to turn back to Herb Stiles, who's unmuted. Herb?
Okay, Rudy, can you hear me now?
I can hear you, Herb.
Yeah, okay, great. Well, when I ask you the question, it's generally always the same question. I'm thinking about the majors, I'm thinking about their attitude towards a big project in copper, a big project in gold. I keep trying to outguess them, and I can't tell which way it's going. I can't tell whether they're encouraged or not to spend big money. There's no big money being spent at the moment. And what's your take on that? What's your take on whether the majors are really going to step up here to put $5 billion into a project?
Well, they have to, because if they don't step up, they're going to run out of reserves, especially in the gold industry. The copper deficits will continue to grow unless new copper mines are built. You know, I think that, you know, we're hitting the market here at a perfect time. We've been patient up to this point in time. You know, we've had companies that have kicked our tires since 2008 and are still there today discussing with us. I'll take issue with you saying that deals are not getting done. You're actually starting to see deals get done. Just an example of recently Newmont stepping in and buying 100% of GT Gold in a friendly deal on a project that's probably 1/20th the size of KSM today and has a bit more logistical challenges to deal with. So I think M&A is now poised to take off. You know, the big companies, after the last blow up at the top when they overpaid for assets, took on debt, they were then punished by their shareholders forcing them to sell non-core assets and clean up their balance sheets. I have found in my career that you have different shareholder bases at market tops versus in a rising market. In a rising market, people tend to buy shares in these big companies with the view that metal prices are going to go higher. And at that point in time, they start to demand for more growth. And the fact is the big companies don't have that growth in their portfolios today. They need to go out and find new deposits and find new projects. They talk about dilution. I love to point to, Barrick and Newmont, the two biggest names in the gold space. When we started Seabridge, I think Newmont had about 300 million shares outstanding. Today, they have 800 million shares outstanding. They have less reserves today than they did 10 years ago, and they're producing less gold today. So their per share metric shrunk. The only way they can keep the boat afloat is going out and do deals. The same thing with Barrick. Barrick has gone from 500 million shares to 1.8 billion shares. They have less reserves today than they did 10 years ago. They're producing less gold, so their per share metrics have dropped. And they all come to market for their deals when the tide is rising, which is remarkable to me. We do our deals when the market is flat on the back and take advantage of low valuation. The big companies do just the opposite because their shareholders are screaming at different times in the cycle to buy versus sell, and they do it at the absolute wrong time. So I think just be patient. The deal's going to happen. We're seeing a lot of interest at the table right now in due diligence exercises. The addition of Snowfield is a game changer from a lot of companies that may have looked at KSM in the past. Like I'd worried about the block caving components of the project, where they didn't have block caving capabilities in-house. With Snowfield now, we can show a project that can go 30 years plus with open pit mining only. So you don't need to worry about the block caving unless you want to bring that in sooner into the mine plan.
Rudy, so only one comment further to that, and that is that in my less expert than your opinion, of course, I don't see any evidence of the big players looking big. Newmont made a small acquisition, and I don't see Freeport, for example, ought to be looking and thinking big in copper, and they're not. They're not talking about big projects. In fact, they're ignoring some of the potential they got in their own portfolios for that. What do you see that might be encouraging to me in thinking that they really care about stepping up big?
Well, because they have to, because they're running out of reserves. And let's face it, Freeport got hit really hard with the downdraft in copper. They got really hard with what happens to them in Indonesia. They need to really batten down the hatches. They need to go out and spend $15 billion at Grasberg to maintain their interest, actually, which got reduced quite a bit as a result of the, I'll call it the expropriation that the Indonesian government had there. They're now poised to start looking at new opportunities. They have to, because they've got some projects in their own portfolio, but nothing the size of KSM. And I think that's the point to make here. Size matters, jurisdiction matters, capital efficiency matters. We talk about $5 billion of investment at KSM, but at today's metal prices, that investment is recouped in about 3 years. And you still have another 50 years of mine life after that, after you've recouped your initial investment. The big companies need new projects. Listen to what the CEO of Barrick is talking about, that for the gold industry to stay relevant, they need to find big gold copper projects in safe jurisdictions. And here we're sitting with the biggest and probably the safest jurisdiction of anything that's out there. And one other comment I'll make is, there really haven't been a lot of discoveries of new big projects in the past few years. You take note of someone like Rio Tinto throwing $25 million at Western Copper on a project that, quite honestly, at the face of it, doesn't have the scale that you would think a Rio Tinto needs. But again, it's the lack of big projects that are out there that these big companies can go after. And I think that really sets us apart from some of these smaller to mid-sized projects that are out there. They're not going to move the needle for the majors. The majors need big projects, and we're sitting with the biggest one out there. Not only the biggest, but one that's permitted and has tremendous capital efficiency.
Okay, thank you, Rudy. That's all I had.
You're welcome, Herb.
Okay, thank you for the question, Herb, and always appreciate having you on the call. Let's go to Ken Fitzpatrick, please. Ken? Scott.
And just a reminder that you'll have to unmute yourself by using the microphone icon.
There we go.
Hi, Rudy. Thank you for a great presentation. You know, it seems that the stock is trading at a discount and seems to have been flat for like the last year. Wouldn't you think, with all that you've said, that the stock should be up at a higher price right now?
Well, of course I do. As someone that owns over 1 million shares myself, I'd love to see the highest share price possible. But, you know, I mean, look, the gold industry is facing headwinds right now. Gold had its big run up last year to above 2,000 in a very challenging global market. And then it's come off since then, and gold stocks have kind of hit the wall here recently, not trading at, you know, anywhere near recent highs. I think that the gold price has to break out of this range it's in. There still is this belief in the market that the Fed can manage transitory inflation. We don't need to worry about the 4 or 5% inflation we're seeing now. It's going to get back to below 2%, that they're going to be able to start tapering at some point and then raising rates. I don't see that happening. I think with the debt that's out there today, if they start raising rates now, it's going to blow up their own balance sheet in terms of, you know, just payments on the outstanding debt they have, let alone what's yet to come in terms of further programs that are going to be put in place by the Biden administration. But you're right, our share price today should be a lot higher. And I think that the reason it's not higher is I've been talking about a joint venture for many years. It hasn't happened. And until it happens, that's when we'll see the day of reckoning, when we'll see, I think, a significant re-rating in the company. You know, I like to point out that the best comp to Seabridge today is Nova Gold, who has a 50% interest in the Donlin Creek asset in Alaska. They've got a joint venture partner in Barrick that's spending 50 cents on every dollar spent. But because they have that joint venture partner in place, they're trading, now it depends on what metrics you use, but they're trading at 6 times our valuation because, again, of certainty that that could become a mine because a senior company is spending dollars on it. I think we're going to see that type of an uplift when a joint venture happens. In the meantime, we continue to try and de-risk the asset, make it more attractive, knowing that at some point in time, we will get the partnership in place that unlocks a lot of value to our shareholders very, very quickly.
So right now it represents dollars at a discount.
I think so. Look, I mean, if you just do the math on now, there's lots of ways of looking at it. At today's metal prices, at the pre-fees that's already in place, we can show an NPV north of $6 billion in after tax. We're trading at less than 20% of that NAV today, whereas a lot of other companies in our space would be trading at, you know, 60 to 80% of that NAV. The difference is our ounces are permitted. Most of these other projects aren't. They got a long way to go yet. If you look at it in terms of, you know, metal in the ground, we have over 2 ounces of gold per common share and over 600 pounds of copper per common share. If you actually do the math on that, that's over $6,000 of metal per share on a share that you can buy at $18 cash today. So again, a big discount to the actually underlying value of metal we have in the ground there. You know, reserve ounces, we're trading at about $20 per reserve ounce, but on a resource basis, we're trading at less than $10 per ounce. I think a lot of the analysts out there that look at these metrics, they're looking at, you know, exploration or development phase companies that traded anywhere from $60 to $100 an ounce in the ground, and we're trading at a big discount to that. Yeah, so we're trading at a discount, but you know, I am 100% convinced that when a deal happens, that, you know, that discount hopefully evaporates and we start to get to values that this asset base should command in the marketplace.
As an aside, I'm in Scottsdale, so I see the management from Freeport at church. Do you want me to say anything to them?
That's great.
Thanks, tell them to keep praying for political stability in Indonesia and higher copper prices.
Right. Okay. Well, thanks very much, Rudy.
You're welcome.
Thank you, Ken. Thanks for being on the call. Let's turn to Paul Forsyth out in Denver. Paul? Unmuted.
Hi, can you hear me?
We can hear you, Paul.
Okay. Well, it's been, I've known you for a long time, Rudy, and A lot of what I've heard from you today is what I've heard for some time. But the thing that really excites me is your holdings in copper, especially what's going on in the world today with the electric cars and geez, I mean, for example, how many pounds of copper goes into one car at the new?
Well, it depends obviously on the car, but I will tell you that an electric powered vehicle consumes about 6 times the amount of copper that a more traditional combustion vehicle would consume. So it's huge in terms of the differentiation between copper and electric powered vehicle versus the cars that I still drive. And the same thing in terms of wind power, the same thing in terms of solar panels. Again, a lot of copper needs to be mined and found to satisfy demand. It's always struck me as interesting that the same groups that are out there screaming for green energy initiatives, funny enough, are the same groups that don't want new mines built. You can't have it both ways.
Right.
If you want to see these green energy initiatives, come to fruition, we're going to need new mines approved. When I started in the business, from exploration to discovery to first production, it was 5 to 10 years at most. Today, it's well above 20 years for a major project because of the scrutiny and the challenges you go through during the environmental approval process. It's remarkable how long it takes to get a project into production. The world needs new projects, and you have a lot of groups out there that are anti-mining, but those same groups are, pro-green energy. You can't have it both ways.
The reserves, the copper reserves of Seabridge, how does that compare to other gold copper companies? Is there any similarity to Seabridge as far as the amount of tonnage you have?
Not even close. In terms of copper reserves, we have double the copper reserves per share than Freeport, First Quantum, Teck, BHP, Rio Tinto. Rio Tinto were almost 4 times per share. And then if you look at companies like Newmont and Barrick that actually are gold companies but produce copper, in terms of per share metrics on copper, we have 5 to 10 times the ownership of copper per share than what they have. Yeah, so we've talked a lot about gold over the years, Paul. As you know, you've been with us for a long time as a shareholder. But I think what's lost is the amount of copper we have. And to be honest, I have not done a good job over the years focusing on what that means in terms of value that's going to be driven by copper. As good as we are in gold, it's the copper at KSM, I think, that's going to get the deal done because of the deficits we're seeing in the copper market today on demand versus supply that will only grow over time.
Thank you, Paul, for your question. We're going to turn questions, I should say. We're going to turn to Prem Patel, please.
Hey, can you hear me, Rudy?
We
Can hear you now, yes.
Awesome. Hey, great job as always. Just a quick question, because you answered all the questions on Seabridge, which is great, but our investment in PZG Paramount, it looks like it's selling for less than $9 an ounce, maybe comparable to where we're at, it looks like, but in the US, of course. Does it make sense for us to invest more than we have today, or is that not really that accretive for us? Any thoughts you have on that investment in Paramount would be appreciated.
Well, from the Seabridge perspective, we already own over 8% of Paramount. We also have a 10% net profits interest in the mine they're now taking through permitting on a project that's gone through bankable feasibility. I own a lot of shares of Paramount myself. I believe in the management of the company. I believe in the assets. Again, they're North American focused with a North American listing. We got our shares at Seabridge when we actually sold Grassy Mountain to a junior company that was then purchased by Paramount. And then we've maintained our share position as they've needed to raise money to advance Grassy Mountain. We participated in those financing, as had a lot of the other longer standing shareholders there. So I still like that investment from Seabridge's perspective and also from my personal perspective.
Thanks for taking that question, Rudy. We're going to turn now to Trent Moran. Trent, questions today? Rudy.
Hi, Rudy. Can you hear me?
Can hear you just fine.
Yeah, okay. I didn't really have a question, but I've been following Seabridge for many years. I started looking into the sulfurates and Snowfields back in '87, I think. Anyhow, my compliments to you. You've done a great job. I'm a BC boy, lived out of Prince George, so I know the area, the geography quite well, and happy shareholder. Thank you.
Thank you.
Trent. Thank you, Trent. We're going to turn to Lincoln Rathman. Lincoln.
Okay. Hi. Thank you for the presentation. I'm kind of interested. You know, China consumes, I'm told, 60% of the world's copper. So, you know, all politics aside, it would seem the Chinese would be good partners to develop KSM. They also seem to be interested in gold. Is this precluded by the international political situation?
Probably to a certain extent it would be. I mean, you know, we've had a lot of challenges in Canada in terms of Chinese company wanting to take over large projects or buy companies. But from our perspective, it's more from the social side. You know, we're looking for a company that has the social wherewithal to do the project right. I have visited a number of Chinese operations in my career. They do tend to skirt the environmental issues from time to time. And I will say that I think within BC, you know, would much prefer us bringing in a well-known North American listed company that has successfully operated mines in a positive environmental way than perhaps bringing in a Chinese company. Now, with that said, I can tell you that, you know, a Chinese company could be part of a syndicate where they bring some of the capital to bear to build a mine, whereas you know, there's a major mining company there that does the heavy lifting on the technical side as builder of the mine and operator. So I wouldn't rule it out in that regard. But in terms of us doing a joint venture with them as the operator, not on my watch.
Mm-hmm. So that's interesting. But this is, how many companies are there in North America that could undertake a $5 billion project?
We believe there are seven, and they're not just, they're North American listed, or, you know, there's a couple of big Australian outfits. You know, on the copper side, obviously the logical names would be Freeport, BHP, Rio Tinto. On the gold company side, it would be Newmont, Barrick. Newcrest has a lot of block caving experience. Kinross is, you know, they're a company of size. So, but again, it's a limited universe of potential partners here that we believe would be appropriate partners in a joint venture. And again, I wouldn't rule out a syndicate where perhaps more than one company works together. We've had syndicate approaches in the past where a mining company perhaps brings in a financial partner or another mining company as co-developers of the asset. So there's lots of twists and turns that can happen, but we need to make sure that whoever is taking the lead on the construction and operation side has the social skills to do so.
Well, I can't help but believe that some sort of resolution of this is imminent, given the current copper shortages, and gold is another matter. But do you have people doing site visits now? And I assume you have lots of NDAs and all that sort of thing.
Yeah, we have a lot of NDAs out there. And, you know, one thing that has hurt us over the past year and a half has been COVID, the ability to actually do site visits. And also for a long period of time, these big companies are more inward looking how do they protect their own people at their own operations without really looking at what comes next for them. As of August 9th, Canada opens up to outsiders where people can, and we have a number of site visits in the works now to get groups back through site. So that's a big help to us because, you know, before a company is willing to step in and make this kind of a commitment, they need to get their boots on the ground. And we're fortunate now that Canada is opening up that we can actually bring outsiders in for their, you know, their site due diligence.
Maybe then we'll have a Christmas present in the form of some sort of announcement at the end of the year. Thank you.
That would make me happy, believe me.
Thank you, Lincoln. Always appreciate the questions. We're going to turn to Scott. He has a question from John Bowen.
Yeah, I have a question for Mr. Boland, and it ties directly into that last question. And it's, Rudy, you have said previously that the COVID leftovers were slowing physical access to KSM project. Has it opened up in recent months?
Yeah, I think I just answered that. Yes,
Yep.
things are getting semi back to normal, although we still have protocols that we've agreed to with the indigenous groups around the project that are important that we maintain that, because, you know, COVID is not, you know, there still obviously is variants out there that are being dealt with. And so we need to be careful, not only for our people, but also people that come into site as workers from the local indigenous populations.
Great, thank you. And I also noticed that Jeffrey Masseri has a question. Jeff, if you, there you go.
Yep. Hi, Rudy. That, as usual, was great. I think that really your tour de force has been to increase the gold and the copper by 10 to 15 times over the past 15 years while keeping the share count so low. It's absolutely astounding. I also think that when you compare your project to any other big project that's out there, they would take $9 to $10 billion or more to get into production, and they would take probably 7 to 10 years to get into production. So I think that there's no question that you would be, if not the only gold copper project coming on stream, but one of the quickest. Okay. Just to some financial questions. Could you address the improvement in grades that you've been experiencing in the last 2 or 3 years?
Yeah, so, you know, we got lucky, Jeff, as you know, I like to say it's all based on our vision, but we got lucky in terms of finding higher grade copper zones at the bottom of Iron Cap and also at Deep Kerr. So if you look at the, you know, you look at the pre-feasibility mine plan that captures 2.2 billion tons of reserves, those 2.2 billion tons contain 38 million ounces of gold and 10 billion pounds of copper in that mine plan. So a lot of metal. And again, that's only about you know, less than 25% of the resources we have available. And then if you look at the mine plan that brought in Deep Kerr and Lower Iron Cap, as I mentioned earlier, that mine plan that's 2.3 billion tons, that's still capturing 40 million ounces of gold. So the gold content went up slightly. The grade stayed about the same, but the copper content went from 10 billion pounds to 19 billion pounds, meaning that the copper grade more than doubled. And that increase in the copper grade obviously has a big positive impact on the project's economics. You know, this is a unique project that from a gold company's perspective, taking credits for copper, they can produce gold at negative cash operating costs. Conversely, for a copper company that takes gold as a byproduct credit, they can produce copper at negative cash operating costs. I can't think of any other projects out there that have that built-in optionality, whether you're looking at it from a copper perspective or a gold company perspective. And then people also forget, oh, by the way, we also have 700 million ounces of silver and 100 million ounces of silver in reserves. So it's remarkable in terms of how grade is improved, and it's going to improve again as a result of Snowfield. You know, Snowfield brings in some very high grade gold right near the surface on a deposit that has a strip ratio of less than 0.5 to 1. That looks, based on previous work we've done, that it could be blended successfully with ore from Mitchell. And again, you know, no changes to the footprint we have in terms of our permitted infrastructure. So yeah, you know, look, I mean, nobody wants to get a deal done more than I do, but I also recognize that while we're waiting, if we can improve the quality of the asset and de-risk it, it should result in a better deal. And I think we've done that over the past few years in terms of higher grade copper and now the addition of Snowfield. The project has only gotten better.
Right, thank you. And I have a couple of questions. First of all, what's your cash balance right now?
We'll be having our Q2 statements out next week. I think we ended the quarter close to 70 million in cash. So probably one of the biggest working capital positions we've ever had.
And what is your drilling budget for Iskut, Snowstorm, and Three Aces?
Collectively, it's about $15 million. But rest assured that if we start making success there, we could look to grow the size of the budget pretty quickly if need be.
Right. Okay, well, look, thank you very much and congratulations on what you've done so far.
Thanks, Jeff.
Hey, Jeff, thank you for your questions. Really appreciate it. We're going to turn to Murray. Murray Vandervelt's on, wants to ask a question. Over to you, Murray. Just getting him unmuted.
Murray, as you know, you have to unmute yourself using the microphone icon. Otherwise, you can send in your question if you don't have a microphone access. There we go.
You're there. Okay, Murray, you're on.
Oh, wait. Yep, we can hear you, Murray. There we go.
Goes in and out.
You're coming in and out, Murray. Sorry about that.
I'm going to go to another question. Maybe you can work with that on. Well, okay, here he is now.
Sorry, Rudy, I'm trying to see this computer problems. You said
No
something
worries.
earlier that I think is pertinent. I mean, I had thought a couple of years ago, because of the grade, that once the big boys felt that gold might have a floor of 1,500 and copper at 3 or 350, we'd see a deal. I think the key point was what you mentioned earlier. They had to repair their balance sheets. And as long as gold and copper stay at these prices, these guys are going to be, they're just printing money now. So I think that should really help move our outlook ahead. And you touched on that, but I think that's key.
I think you're right, Mary, especially when you look at it. Look, the big companies made promises to their shareholders that they would return capital to shareholders, either through increased dividends or through share buybacks. I think they've done a pretty good job on that because of the amount of cash flow that they are now generating. But they're generating a lot more than they need just to deal with shareholder, returns. And I think that excess cash flows, it has to go to new projects because, again, they're running out of reserves. In all my years in the business, I've never seen a reserve life in the gold space as it now exists. 10 years of metal left in the ground on companies that are not finding new projects through their own drill bit. So they need to go out and get on the M&A side again, identify opportunities. I think one difference this time around versus what they've done in the past, I think a lot of them blew their brains out by going in and trying to buy the company first or buying the asset for large dollars, and then they still had to commit the capital to develop the mine. That's why I think a joint venture is going to be far more palatable to them in that they don't need to buy Seabridge. What we're looking for is a partner that's going to come in and to spend the dollars to make it a mine. So they don't have that big upfront payment of buying the company first and then still having to spend another $5 billion plus to build it. But with the amount of cash flow, I mean, you look at the cash flows that are being generated by these big companies, it's remarkable in terms of where they are today versus where they were just a few years ago.
I believe it. I love it. The question I was going to ask, and then your press release came out, is what's happening in Snowfield? And so I was very happy to see that this morning. Can you talk a little about directional drilling? We know it's gone on in the oil industry for years. And the savings and the costs, the opportunities presented to you by doing that.
Yeah, we've done that a lot, actually. We did a lot of that at KSM where, getting down to deep Kerr and lower iron cap, they were 1,000-meter plus holes. So if you're able to re-enter an old hole and then I call daughter off of that, kind of angle off of that, so you don't have to drill at the top portion, it saves you a lot of money and a lot of time. And we're now going to do that at Snowstorm. I mean, the first year at Snowstorm, we focused on confirming that we had the same structures that exist at Twin Creeks and Turquoise Ridge that run up into our project. We confirmed that with the same rocks. Last year, we confirmed that there's gold in the system. One unique thing about Getchell is, you could be within 25 feet of multi-ounce material and still only be seeing 0.2 or less in terms of gold grades per ton there. So, showing that there's gold in the system, we can now vector off of that based on directional drilling and hopefully vector into some high-grade gold without having to drill the top several hundred meters again. That's been a big plus for us in terms of how we've used that technique. And I think as a result of how we've used it in the driller companies we work with, we probably have used it more successfully than most companies out there.
Well, I hope you strike gold again, so to speak, no pun intended, because I think that'll kindle some interest while we wait for the big boys to get off get going.
Yep.
Thank you.
Thanks, Murray.
Thanks for being on the call, Murray. Let's turn to John Salee. John? I'll unmute you, John. There you are, John.
Rudy, I'm just wondering, you answered the COVID question, but in terms of the drought and fires in the Northwest, do these have any impact on your properties?
Not yet. Obviously, fire mitigation is critical at projects like KSM. So we take that seriously in terms of safety and doing what we can in terms of mitigating potential fire concerns. But it was worse. It was a lot worse a few years ago when we had a lot of forest fires a lot closer to us than we do this year. So we really haven't seen any impact at KSM in terms of forest fires at this point in time.
Thanks, John. Very good question. We're going to turn to Heinz Thoma before we proceed to close. Heinz?
Great presentation. Story gets always better, Rudy. Most of my questions were already asked. Do I understand correctly that you have the permit in place for the construction of KSM?
Yeah, so a project like KSM, it's not just one permit. The way it works in Canada and a lot of other jurisdictions as well, you get your environmental assessment certificate approval. You then follow up with specific permits that you need to have. In the case of KSM, I think the total number of permits you need is about 160 permits. We received our environmental assessment approvals in 2014. We then continued on to get permits in hand that would cover the first 2 and 2.5 years of construction. So right now we have about 70 some odd permits already approved, and the balance will come with final detailed engineering that would be a result of a bankable feasibility that we would look to complete with our partner. But the nice thing is the permits that we have in place now covers the first 2 to 2.5 years of construction. One concept to look at is you can really improve scheduling of the project if you get site capture done now. So we'd love to find a partner that's willing to look at getting into site early on while they complete bankable feasibility in terms of roads, perhaps starting some of the tunnel portals, fish compensation that has to be done before you can actually, cross rivers. So all that type of stuff, we'd like to get an early start on. Hopefully we can find a partner that sees it the same way we do and can start spending those types of dollars at the project.
And you indicated about 4.5 to 5 years construction period, roughly.
Yeah, now so there's a couple of if you can get capture site before you start the big construction items, that could shave some time off of the timeline. Another thing we're looking at, one of the big critical path items we have are the tunnels that we have to be built to get from the mine to the mill. And right now, I think that's a critical path item that leads to the 5 years of construction. In our assumptions, we're only assuming about 5 meters of advancement in those tunnels per day. If you actually look at some of the new equipment that's now available in places like Norway and elsewhere in Scandinavia, you see these underground miners that can construct tunnels, and they're getting penetration rates of 15 to 20 meters a day. If we can get that type of penetration with the tunnels, it's going to shave a lot of time off the construction period. And if you shave time off the construction period, just having the camps open costs you about $400 million a year. So if you can actually reduce your construction by a year, you save about $400 million just not having to have the camps open for construction and getting into production sooner as a help. So these are things that we'd like to discuss with our joint venture partner on are there ways, improvements that we can make to shorten the timeline to first gold pour.
Thank you very much.
Thank you, Hein. And we're going to conclude with our friend Jerry Needleman. Jerry, anything to add before we proceed to close?
Oh, yes, thank you. Yeah, Rudy, question, in your opinion, how do you think that Bitcoin and the cryptos have affected the gold price?
You know, I think, Jerry, at the margins, they probably have, but I look at crypto, you know, crypto's a speculation. You buy cryptos to hopefully make a lot of money on a higher price. You know, I think people tend to buy gold as a way of wealth preservation. So I think it's really a different mindset of those that buy gold for wealth preservation versus those that are buying cryptos to strike it rich. But I think at the margins, you probably have some overlap, but I really think they're different types of investors. And if you look at the size of the crypto market compared to the size of the gold market, the crypto market is quite small. You know, what's the total crypto in circulation now? $1 trillion. You know, the value of all the gold above the is probably $12 trillion. So, you know,
The
it's a small
answer is buy more Seabridge is the answer to that, Rudy. That's it.
I won't disagree with you, Jerry.
Yeah, there you go. And one last question. What's the short interest right now?
It's actually gone down a bit. Last time I looked, I think it was down around 6 million shares. Might even be below that now.
Okay.
Yeah, which I think is an indication perhaps the worst is behind us, and now we're getting poised for a move up. I still believe that gold will break out of this trading range it's in. You know, this call it 1780 to 1840. I think when it does, the amount of money that's going to flow into the gold market, and especially gold equities, will be very, very meaningful.
Great. Thank you, sir.
You're welcome.
Thank you, Jerry. Rudy, this concludes the call. We'd love to hear our closing remarks from you. Please.
Well, first of all, David, thank you for setting this up. You know, we've worked together for over a decade now, and you guys always do a great job for us. And then those of you that are on the call, thank you for taking the time. You know, I am really looking forward to doing face-to-face meetings again after 15 months of Zoom meetings or virtual meetings. It'll be nice to get back out on the road and seeing investors face-to-face. But in the meantime, if you have any follow-up questions, don't hesitate to reach out to me. My direct email is Rudy, R-U-D-I, at seabridgegold.com. And if you do send me an email with a question, make sure you include your phone number in it, because I would much rather call you back than just answering back in an impersonal way. So thank you, everybody, and look forward to our next call.
Thanks so much. All the best to you. Have a pleasant evening. Thanks again, Rudy, for presenting. All the best. Bye.